Hey there, I'm going to go over some really basic terminology for tax purposes, but they happen to confuse a lot of students all throughout the semester. So I really want you to think about this and get a hold of this. And I think the concept, what I'm saying, is pretty easy to understand, but you have to read questions carefully when you're being asked them on homework and on tests, because this just gets missed a lot by students. And I think it's really more of a reading comprehension thing than it is understanding what we're talking about. So I've got three types of gain on my board: unrealized gain, a realized gain, and a recognized gain. For tax purposes, recognized gains are the ones that we pay taxes on. To recognize, I think in my head, oh, I'm going to write it on a tax return. I recognize that and pay taxes on it. So let me give you a little example. Suppose I bought some stock today, or no, never mind. I'm going to buy it 4 months ago, and I paid $10,000 for it. And then today, that's going to be my basis in the stock, right? Today, I checked the stock market, and the fair market value of the stock is $14,000. But I don't sell it, I still own it. I have an unrealized gain of $4,000, right? And y'all are all like, duh, yeah, we're in tax. We know all kinds of things about this in accounting. That's not hard. Okay, now what's a realized gain? Well, now I would need to sell the stock. And suppose I sell it for $15,000. That's my selling price. My adjusted basis is what I paid for it. 10 grand. We won't go into any other specifics. We'll learn later, like selling expenses and things like that. But for now, we'll just say, my basis is 10,000. So because I sold it, now I have a realized gain. So I think of the word really. What do I really have? I really have a $5,000 gain. Okay. So what is this recognized gain? Well, that means for tax purposes, I know you really have a gain of 5 grand. That's called realized. But how much do you have to put on your tax return and pay taxes on? Well, there's a gazillion different exceptions in the code that says, I know you really have a gain, but we're not going to make you pay taxes on it right now. We're going to let you defer it or avoid it altogether. So one example that's real easy that most people remember right off the bat is the example of a gift. Suppose grandma gave me $10,000 in cash. That is income that I really have. So I've realized $10,000. But the Internal Revenue Code, Congress has made a law that says gifts are an exemption. You do not have to pay taxes on those. So my recognized would be zero. In this example up here with my stock, I don't know of any exceptions that we've learned so far. We'll get to things later on. But right now, my recognized would also be the 5,000, and that's the amount we pay taxes on. So usually that's a pretty easy concept. Stop the video if it's not and make sure you understand the difference between realized and recognized. And then let me throw a couple of like true false questions at you and see if you can see what I mean by the wording. True or false? All recognized gains first have to be realized. I'm going to put them on my tax return and pay taxes on it. Do I have to realize them first? Yeah. Otherwise, it's an unrealized gain. I haven't sold it. I haven't gotten rid of it. I wouldn't report it on my tax return. So that is true. All recognized gains must first be realized. Now let me throw another one at you. All realized gains are recognized. All realized income or gains, I could say it either way, are recognized. No, we just talked about that. And I can't go over them all right now. We will learn them throughout the semester, but there's a bajillion examples of when, like grandma and the gift, oh, that's realized. I really got that $10,000. But the tax code says I don't have to recognize. So read carefully on tax exams, on the CPA exam. I hear all the time, that question's tricky. Those words, yeah, they're words. Your clients will never come in with a tidy little list of numbers and say, here, add this up for me and I'll pay you a bunch of money. No, we get paid to understand words from our clients, help them figure it out, analyze it, and come up with the best tax strategy or whatever it is, in your area of accounting or finance that you do. So words are really, really important. And our Internal Revenue Code is made up of a bunch of words that Congress created that we have to interpret and apply to specific transactions with numbers. So the numbers are the easy part. The reading and the making sure you know what the question's asking or what your client is asking you, right? That's what's important. All right, hope that helps. We will touch on that all semester long.